Hey, welcome everybody. You're tuning in to howtoplaystock.com. My name's Casey Kepley. In today's video, I'm going to be covering the initial public offering, or IPOs, and we're specifically going to take a look at Snapchat because that is an IPO that is actually getting ready to hit the stock exchange here fairly shortly. So stay tuned because I'm going to give you my thoughts on that, and I'm going to show you kind of what you can look for, if you're actually getting ready to invest in like an IPO. So I will see you in the next portion of this video. Keep watching, and I'll talk to you soon. Hey, what's up YouTube? Welcome back. Today's February 23rd, 2017. In today's video, I wanted to cover the topic of IPOs. Alright, this is an initial public offering. This is what companies will do when they go public on the New York Stock Exchange. Alright, now it may sound like a great idea to get in on a company that's just going public, but there are things that you need to look for, and this is considered a very risky trade or a bet if you're planning on throwing all your money in on an IPO. So that's one tip for you right there. Don't throw all your money into an IPO that just went public, because there's a lot of uncertainties, a lot of unknowns that can exist in the future, as well as before it's even launched, before the company is even launched. All right, so keep that in mind. And as a great example to kind of emphasize on what I'm talking about here, let's take Facebook for instance. All right, now I've got a few notes here that I wrote down about Facebook when it first hit the market, and Facebook's IPO went from $42 a share to $38 a share within a single day. Okay, now this happened because their platforms experienced high volume when it came to the trading, and it ended up crashing. All right, and the only thing that propped that stock up from falling even further on its first initial day was that it was propped up by Morgan Stanley. All right, so a lot of people lost a lot of money on Facebook's initial public offering. And again, like I've said before in the past, a lot of people, what they'll do is they'll panic and they end up selling. So if you're going to do an initial public offering, you might want to look at it more long term rather than short term, because if you're looking at short term and it does start falling and dropping in price dramatically, you might end up selling that day and then getting out with a loss. Okay, I would highly recommend don't sell. I mean, you're not going to lose until you hit that sell button anyways. So if you're going to get in on an IPO, look at it more long term. Okay, now with Snapchat. Okay, let's talk about Snapchat for a minute. This one goes public March 2nd. All right, and it could go public anytime between 9:30 and 9:30 in the morning and 4 p.m. Now here's the thing: you really don't know. You don't know when it's going to go public. At least right now. They may tell us a little bit later when that's going to happen, and give you an exact time so you can kind of know. But a lot of times with IPOs, it's kind of, there's a lot of shades of gray. You really don't know much of anything. They do have a market cap of $18.5 billion. So guys, this is a really large tech company. So there's a lot of money involved in this. It's the largest IPO offering yet in the tech industry. According to price to sales, all right, now I'm getting this information from just doing a little bit of research. Price to sales, stock should trade at about 46 times the sales. All right, now, when you're looking at math and stuff like that, if you don't understand price to sales, that's okay. Basically what this means is that Snapchat is going to be the most expensive tech stock since Facebook. Okay. Now IPOs, normally you don't really hear that too much. IPOs are not supposed to be that expensive. And if you're looking at an expensive IPO, I'm gonna say caution, beware. That's a red flag in my book, because if it's too expensive going on to the stock exchange, chances are it can only fall lower. All right, and then you end up losing money. So I would be cautious. I'd beware of Snapchat on the IPO. Now you might be asking, what price is it going to trade at? Chatter out there is anywhere between $20 and $40. If it trades lower than that, you might be looking at around $16 to $18. Okay, so that's Snapchat. That's IPOs for you. Like I said, there's a lot of shades of gray in those, and there's you don't know a whole lot about them. So my thing again, when I'm investing in a company, I look at investing in individual companies as higher risk. So that goes into my growth bucket, and if you've been following my channel, you know what I'm talking about. And if not, go ahead and subscribe to the channel. Okay, start learning about some of this stuff, because I cover broad topics, and I kind of tie everything into these broad topics that I talk about in investing. With IPOs here, I'm putting that in the growth bucket because it's high risk. All right, and you can lose some money on that. And the name of the game here is not to lose money. All right, like Warren Buffett said several times, rule number 1 is don't lose your money. Rule number 2 is follow rule number 1. So with IPOs, you definitely run that risk of losing your money. So again, do your research. Snapchat sounds like a great company, and I'm sure it probably is. But here's another thing. I come from a tech industry background. I was a network engineer for about 7 or 8 years. And I've got extensive knowledge about computers, especially when it comes to the network side. And I can tell you this. If you have a tech company, all right, and it's web-based, I can tell you right now that that company runs 100% off of the fact that we have an internet. Now think about this for a minute. What if that internet went away? What if that internet did not exist? Let's say the grids go down, okay? And they can't get the grids back up. This is an extreme scenario, worst case, but it could happen. Now what if something like that were to happen? Guess what? You don't have Facebook, you don't have Snapchat, you don't have the internet. There's a lot of companies out there who run 100% off the internet, and that is their model for making profits. Those companies are going to take a hard hit, and if they can't get the grids back up in time, chances are that company might go out of business. So that's something to think about when you get into tech stocks, especially like the ones that are web-based. Okay, just food for thoughts there. Because at the end of the day, when you're throwing your hard-earned money into a company, again, it's high risk, and I put that into the growth bucket. But I try to tend to stay away from tech stocks, because tech stocks, they constantly have to evolve, and they're looking at about every 6 months they have to evolve or they fall off. Okay, so it's very, very, very competitive, very risky, and yes, you can make a lot of money. If you're going to do that, though, I would probably recommend just getting in and out on some of these stocks, okay? That's all I have for today's video on IPOs. I hope you enjoyed the information I was throwing at you here. If you liked the video, go ahead and hit that like button and share it with others. Until next time, be patient, and remember, guys, income's the outcome, all right? I'll talk to you later.